Welcome back to this Diwali special. We've been speaking with two market masters of the private equity and the private credit capital market. We have with us Sriniwasan of Kotak Alternate Asset Managers and Renuka Ramnath of Multiples Alternate Asset Management. Renuka, Srini, thank you very much for waiting on. Okay, Renuka, I'll come back to the threats, if any, for the private credit. But before that, I wanted to ask you, are you seeing the proliferation of themes in tier 2 cities? I mean, until now, most of the companies that you all brought to the market were largely metro, PVR types. But are you now seeing the same companies go tier 2 and more tier 2 companies and tier 3 cities approaching you?
Yeah. So I'd like to look at it, Latha, as people at different affordability levels. And they exist in tier 1 cities as well, right? So even tier 1 cities, we have people who have household income of 2 lakhs, 5 lakhs, 10 lakhs, whatever. Today, because we are able to reach tier 2 cities, the total addressable market for these kind of household incomes have become large enough for people to now start thinking about producing products that are appropriate for these markets, right? Whether it is about personal consumption or about microcredit or about micro insurance, it has become possible to provide products and services. So I think of it as what's the household income rather than are you sitting in tier 2 or in tier 1?
Tier 3 cities. Okay, Srini, do you also get a sense? I mean, what is your sense in terms of the geographical spread? Do you think India is becoming a larger addressable market now?
It is obviously becoming a larger addressable market, and as she put it, in terms of the size of the middle class, which is sort of expanding, our experience when we are picking companies to invest in, and we are seeing a couple of things. One is, we are able to pick opportunities not just in the technology or the services space. We've been able to provide solution capital across multiple industries, including some of the manufacturing businesses. So, and when we see the numbers of those companies, and we feel that, they seem to be addressing practically every end of the market. And while there may be regional disparities with regard to what the performance of the company could be, but clearly the market is becoming deeper and wider, and that's a good news.
Okay. Let me come back to the private equity, threats that people, not threats, probably red flags that regulators are looking at. We hear that even the US SEC is moving to regulate private capital markets in the United States. Do you think, and of course, SEBI is also moving to try and regulate AIFs a little more. What's your sense? Is it a time that regulations are needed, more regulations are needed?
I would not say so for India, because we are in a very emerging phase, and excessive regulations before the product is fully developed, at least for Indian investors, could become counterproductive. It might keep away some of the investors from this product longer than it is good for them.
Okay.
See, if we don't raise money in India, we will go and raise it abroad. Finally, we will raise money for deployment. But who's losing out? It's the Indian investor who's losing out, because he is not able to get the upside from our own economy, and we are giving the upside to international investors.
Okay.
Having said that, as an industry, we greatly respect the need of the regulator to make sure that there is sufficient transparency, full disclosure, non-discrimination between different investors in the same fund, and doing what you said you would do, and don't raise money on one strategy and deploy on another strategy. So taking care of investors who probably will not know to ask the right questions and all of that, we do appreciate it. But crossing that line and disrespecting that fundamentally this is a GPLP business, where investors have a lot of rights in their documents, and they choose their manager after careful evaluation.
And they're evolved investors.
Yeah, and might come to our own detriment. Finally, it is every time we kind of distribute the money abroad, we tell ourselves that this money could well have been enjoyed by Indian savers.
Fair point.
Yeah.
What about what are your thoughts, Srini, on this?
It's absolutely.
It's just that there are HNIs who have invested in AIF funds and who complain, I mean, obviously they've complained to SEBI, otherwise the rules wouldn't have come from SEBI, that, the redemption is being put off 2 more years because of the nature of the market maybe.
Yeah.
So SEBI wants to ensure whether that needs to be controlled. That seems to be a fair ask.
It is a fair ask at one level. At another level, I think, as Renuka put it, it is essentially, what was the reason why we had a minimum 1 crore investment? Please remember, these are funds which were raised about 8 or 9 years ago. 8 or 9 years ago, if a person was investing 1 crore, I think the person probably knew what he was doing. In the example of purchasing TV that I gave, obviously this guy is not purchasing a TV, he's putting in 1 crore of his money and he would have done his homework. And presumably he would have also read the contract, right? And many of these cases, when there is an extension, the managers have gone back to investors, taken their specific consent to do it. So my sense is that they should have left it in terms of the privity of contract between the investor and the manager. You can put some guardrails to make sure that it is done in a very transparent process. For example, you could prescribe that it's a similar voting process that you have for public market companies, for example, which is what we had followed. Having said that, I think to her point with regard to, if you put more guardrails and try to, in the attempt to protect investors, if you deny investors the possibilities of participating in what is arguably one of the most attractive, private equity or private credit markets, it would be a disservice to the industry. And I'll give you an example. And regulatory oversight, not just by SEBI, but also the other regulators, let's call it the IRDA, for example, or the pension fund regulator. Currently, the limitation that they have put with regard to investment in annuity products, etc., is a great disservice to us. I mean, think about it this way. The government takes the development risk of any infrastructure asset, a road, port, whatever it may be. They take the land acquisition risk, construction risk, completion risk, and then the tolling starts.
Yes.
Once that starts, they put up those assets for sale, and you and I start paying the toll for all the risk. First of all, they took out tax money to build it in the first place. And then all of that goes to a global pension fund, and that pensioner is getting yours and my toll as an annuity income. Why would that happen? I mean, we should be getting our insurance companies and our pension funds to buy those assets. It's recycling of our capital after all the risks have been taken away. So these are things that we really need to put some real thought behind.
Okay, actually this calls for a separate discussion because this is an extremely well-argued point, but we are running out of time. So tell our investors, Renuka, today what looks like an attractive sector to you?
So I would say financial services is an evergreen, attractive sector.
And an old love for you.
Yeah, and an old love as well. And, if I look at my own portfolio, if I look at the runway for growth of those companies, the way we are able to use technology to understand our customers better, manage our risks
fintechs
better.
Would it be?
Deploying technology in your core business. Sometimes fintech gives a sense that everything is only tech and there is no physical presence. I think still a physical reach, having branches, having touch points with the customer is an important one. But the penetration levels is so low and the need is so high. The entrepreneurship is so high in the country, whether it is SME financing or microfinance or housing
All finance
financing
banks
or personal credits. The growth seems immense for disciplined company. I'm not talking about hubris. It is very, very careful risk management, great deployment of technology, measured growth, well-capitalized balance sheet. It is an endless growth journey. And then there are, of course, other attractive sectors like healthcare. There is domestic consumer, done sensibly, is a very attractive sector. Pharmaceutical.
Your best sector.
Yeah.
Well, financial services, obviously, because it's not, we can't have enough of it in the country. And you can play it in very many ways. The second, of course, is, from our perspective, we are playing, let's say, if you look at Digital India as a theme, because we manage multiple strategies, we are playing the Digital India through who is going to put the infrastructure for Digital India to really thrive. And therefore, we have a specific data center fund which is building out data centers. And with the advent of 5G and AI, the data center demand is likely to explode. We are also providing much needed capital for consolidation in industry. as you know, the banks are not permitted to provide consolidation financing.
You're not saying realty. I thought you would say that first.
I'm going to come to that. So I'm also playing the domestic consumption story because, you know, the residential real estate market is doing very well, and we continue to sort of put very significant capital. It has great multiplier effect in the economy. Okay. So we are playing these three themes through three different pools of capital, and I think it's an interesting and sweet spot to be in.
Let me try what do you call a rapid fire. One question only. So please give me a monosyllabic answer.
Okay.
By when do you think we will have a new high in the market?
Post-elections.
Okay. You?
2024 May.
Okay. Okay, that's excellent. Yes, I guess that it takes away all uncertainty, so it should be there. We have to wrap up on this very interesting episode, but we will get Renuka and Srini often enough in the new Samvat. Thank you very much for watching this Diwali special.